Here we are. It's 1 p.m. Dubai time, so I'm gonna start this conversation. Welcome everyone. My name is Lynn. I'll be the moderator for today's session. It's a very exciting session about a very particular role digital finance can take in our lives and maybe change the world, hopefully change the world. So when we say digital finance, when we say digital disruption in general, we think of our smartphones, we think of, the way that we communicate nowadays, how easy it is, how our lives are also more fun. And when we think of digital finance and the disruption in digital finance, we think of, how easy now it is, or it sounds, to transfer money to everywhere on the planet. We also think of ways we can pay our, groceries. We can shop online, and with the coronavirus, when it hits, new layers or new discoveries were made on a personal level and also on government levels. So digital or the digital world has helped governments to limit the spread of coronavirus, and digital finance has also helped people and government to, be more sheltered or limit the financial effects of this pandemic. Today, we will talk about the role that digital finance has to play, or should play, or can play. So now we'll discuss those differences in the conversation with Mr. Simon Zadig. So Simon headed the secretariat at the UN task force that worked, or that specialized to look into digital financing and the sustainable development goals. So basically making our lives, or giving us better lives. How can digital finance do that? In a very simplified, introduction. This is just, 2 words to introduce the topic. And also, as an introduction to the topic, I will be asking Simon to take us over a couple of pointers through his presentation to see what this task force of the UN, what were the main findings of this task force, and we will start the conversation from the pointers of Simon. So Simon, welcome again. And I'm inviting you now to start with your conversation, or a couple of words to introduce, this chat, and then we'll take it on forward with the conversation. Just before giving the floor to you, Simon, let me remind everyone that the Q&A box in this chat is made for your questions. So please drop them and ask Mr. Simon, and we will be, asking and talking about those points that you will be mentioning. Also, if you're looking for the Arabic version of the chat, there's a translation button you can click, but make sure to mute this mainstream. إذن بإمكانكم أن تتابعوا هذا الحديث باللغة العربية من خلال الترجمة الفورية الموجودة هنا، ولكن حطوني على ميوت، أو كون هذا الستريم أو الصوت على الميوت حتى تسمعوا الترجمة بشكل مباشر. Simon, the floor is yours. I'm sorry for the long introduction. The floor is yours. Go ahead.
No, the long introduction is super helpful. And Lynn, thank you very much indeed. For those of you who came on a little bit earlier, you'll have also heard a little bit about Lynn, which is not a bad thing. So I'm going to use a few slides, move through them fairly quickly, and hopefully leave lots of time for discussion and Q&A. So let me just work the magic of the technology and do this effectively. Lynn, can you confirm that you can see it?
Yes.
We're good. Okay, so look, he says, okay, that's right. Okay, so the UN Secretary General established this task force on digital financing of the SDGs. And I won't go through the 17 members. If you can peer at the small text, you can see that it's quite a wide ranging group of people from CEOs of major financial institutions, to governors of central banks, to heads of UN agencies, and to fintech entrepreneurs, also from your region and elsewhere. And the question that was asked was, if digitalization changes everything about finance, disrupts the way in which financial and capital markets work, disrupts the way perhaps also in how public finance works, is this a good thing or is this a bad thing for our need to mobilize funds to support the realization of the Sustainable Development Goals? So how can we best harness this disruptive effect of digitalization in a way that aligns finance with SDG outcomes? So that was, if you like, the frame question. Obviously, halfway along the road of work, the pandemic happened. And Lynn, you've already made the point that the tragedy of the pandemic has catapulted this topic into a more vibrant reality, whether it be in the payment of social safety net for individuals, support to SMEs, enabling e-commerce to work more effectively when social distancing prevented real-time physical purchasing. Clearly, digitalization of finance has kind of come into its own in a far more rapid way as a result of the crisis that we're going through. And so although I'm not going to talk about the pandemic specifically, clearly that is a context that we need to keep in mind. So for those who know about finance, I won't bore you with this terribly. For those who perhaps know less about finance, why would one mess with the financial system? You know, why doesn't one just pass better environmental regulations or ensure that, you know, inequality is lower because of wage rates and so on? And so there are a whole set of reasons why the financial system doesn't always work terribly well. And in addition, therefore, to sort of real economy regulation and pricing, you know, more effective use of public spending, we need to mess with the financial system too. You know, risk pricing is not done effectively. The interests of the owners of capital are sometimes not taken into account. You know, the monopolization of parts of the financial sector lead it to be too expensive and so difficult, for example, for SMEs to borrow money. Big macro issues like climate change, you know, may create long-term financial instability challenges. All of these reasons mean that we're not just looking at the real economy, but we're also looking, if you like, at the financial economy and what needs to be changed in order to make a difference. But making a difference, you know, is important, but not enough. We're trying to understand more broadly how finance as a system works and how we can nudge it into greater alignment with our interests, national priorities, the priorities of regions and families and individuals, to ensure that not just we're doing something that counts, but that we're doing something that counts more systemically, more ambitiously, more at scale, and more quickly. And so there are lots of ways in which one can get at the financial system. And I'm not going to run through the many different mechanisms and tools and governing institutions that affect the way in which finance works. I'm just going to really focus on that fintech piece of the story. But one's got to think about fintech in the context, not just of financial flows or a particular fintech startup innovation, but the way in which finance as a whole actually works. 18 months on, the task force produced its report. So at the end of August, and I would encourage folks to go onto the website and have a look at the material, big versions, little versions, multilingual versions, and so on. And essentially, the action agenda comprised 3 pieces of the story. And I'm going to dive a little bit into each of them in slightly different ways. What really are the market opportunities by harnessing digitalization? So ultimately, how can you move money in a different way? What needs to happen at the national level? You know, ensuring that fintech innovation and investment in digital and all of those things that we see in your region as well as elsewhere are aligned to national priorities. They're not just spinning innovations that may be commercially attractive, but don't deliver development outcomes. And what about that international side? You know, what happens on the ground in a place may be influenced by completely unknown institutions in the international world, the Bank of International Settlements or the Financial Stability Board, all kinds of almost completely unknown organizations and networks that may affect whether a bank will lend you $10 or not lend you $10 at the end of the day. So what about that international governance side? I want to start then with the real money and the real opportunities, because that's kind of where, you know, the road, sort of the tires hit the road. And we've focused on 5 major catalytic opportunities. So these are multi-trillion-dollar opportunities for harnessing digitalization to try and deliver finance into areas that are of national and international importance. So that SDG lens. A focus on savings, and I'm going to come back to a particular example in Bangladesh on that in a second. You know, the $5 trillion that are needed to lend each year to small and medium-sized enterprises, ultimately where a huge portion of our global employment actually comes. How can digitalization kind of drive that SME lending more effectively, particularly algorithmic lending, so automated lending using big data and artificial intelligence? Yeah, how can we not only make public finance more efficient, but also make public finance more accountable? Blockchain and many other aspects of the digital ecosystem can move us towards a radical transparency that not only delivers efficiency gains, but if you like, reduces the amount of leakage or wastage, inappropriate use of money. Capital markets, $185 trillion, so a huge part of our global financial sort of legacy, if you like, or balance sheet, already $30 trillion sort of tagged against environmental, social, and governance aspects. How can we use digitalization to bring data much more effectively to bear in the way financial decisions are made across the world's capital markets so that we can begin to get at that bigger lump, $185+ trillion. And ultimately, what we as individuals do, often not included in our notions of global finance, but actually, you know, we spend a bunch of money as individual consumers, as citizens. You know, how can we begin to use the fact that we're more and more online making those purchasing decisions to provide better information, behavioral nudges to try and convince us as individuals to not only buy to consume, but to buy to invest, that what we're spending our money on for consumer items influences the world around us and the future prospects of our countries, families, and children. So these are the 5 areas that we've really focused on throughout the task force, and each of them we've gone into really some detail as to how these opportunities can be harnessed. I wanted Lynn just to focus on one and go just a touch further to kind of illustrate the point. So this is the case of Bangladesh. Bangladesh needs, you know, something like $60 to $100 billion a year to invest in what we might call long-term infrastructure, schools, hospitals, roads, bridges, all of the infrastructure that's needed in order to drive economic prosperity in Bangladesh. Today, only a part of that bill is being fulfilled, and over a half of that money is being derived from international capital markets. So expensive capital, you know, foreign exchange risks, tied into political relationships, puts pressure on credit rating agencies, you know, tying our infrastructure development into international capital markets, you know, maybe the thing we have to do, but comes with many downsides. And yet, in the last 20 years, the extent of domestic savings in Bangladesh has tripled, as it has across the world. In fact, in many countries has gone up far more. And yet, analysis shows only 6% of domestic savings in Bangladesh is actually flowing through into long-term development finance. So that intermediating role of financial and capital markets not working very well. And so digitalization can help unblock that problem, increase the flow of domestic savings into long-term development finance, and reduce the dependency of countries like Bangladesh on international capital markets. So at the end of the day, you're reducing the cost of capital, but also the dividends that you're paying are not going, if I might say it, to JP Morgan, yeah, or a foreign government. but are going to your own citizens, and they may be taxi drivers in Dakar using their mobile phones to save 25 US cents a time. So you're paying dividends to citizens, which has multiplier effects as well as distributional effects. You're reducing the cost of capital. You're beginning to use your money instead of tapping into what is often expensive and risky international capital. So this is not just some fintech startup we're talking about. This is how digitalization really helps restructure our understanding of how to use what is ultimately our money. The reason this report is called People's Money is because all of the money we're talking about, whether it is channeled through governments or channeled elsewhere through financial markets, ultimately belongs to people, to individual citizens. I wanted to spend a kind of moment sort of flipping the coin from a financing view to the use of fintech to influence us. So this is an example of an app called Ant Forest, placed on the platform of Alipay, which many of you will know is one of China's major payment platforms, so like PayPal and others that you may have in the region. And the Ant Forest app provides consumers, so all of you, as you spend money, with information on the carbon footprint of your spending. So these are algorithms built off of your financial transaction data. If you beat the benchmark, so you take a bike rather than a taxi, then you get green energy points. The green energy points go into a gamification model sitting within your social media network, which you can play. And as we begin to see those individuals engaging and responding to this information, they begin to purchase lower carbon products. Interesting, and then I'll move on from the example, is that whereas this initiative was envisaged when it was launched in the middle of 2016 as, if you like, an interesting side game that may have a few 100,000 people that kind of want to play, 3.5 years later, there are 550 million Chinese people that are using this application in their daily lives. So this is actually the world's largest carbon market with no policy and no price. This is all based on individuals' preferences and identity online. So this is a very different part of what fintech can offer, not simply ways of channeling finance more effectively, but ways of engaging people collectively at scale in taking action against what we often think are sort of way out there things like climate change and nature and so on and so forth. I'm coming to the end, and I suppose I just sort of have to, particularly from the UN, talk for a moment about governance. All of these things that I've described so far are principally about market innovation built on the back of a digital ecosystem. And those opportunities are huge, as I've described, and exciting, but they come with challenges. And I wanted just to highlight one, and we can obviously then come back in discussion to more if you want. We see in the context of digital both rapid innovation and at the same time rapid market concentration. So these two things are happening at exactly the same time. And the pandemic, as we know, has benefited primarily the big tech platforms, that have grown enormously, become hugely more important in our lives. And of course, in the context of the way markets work, have become more and more dominant players, including in the finance area. And so we see, for example, Facebook seeking to launch a global digital currency, Libra, along with a number of other actors. We see China thinking about doing the same. We're seeing a generation of very, very large, if you like, big fintech platforms beginning to emerge that will have important spillover effects on the way in which development actually happens. And we are not well placed at the moment to govern those initiatives. There are many of them from many different parts of the world, and they raise many real issues about how to ensure that big fintech, so beyond these funky little innovations, are serving the interests of sustainable development and the citizens of different countries and regions, rather than becoming a new generation of sort of rent-seeking monopolies that are often hollowing out the ability of individual countries and regions to manage their own affairs. And for that, there is that world that I mentioned at the beginning of sort of slightly unknown governing institutions that are not governments, but are often collections of central banks and financial regulators that most of us know nothing about, that have historically really focused on a very narrow view of governance. So financial stability, money laundering, sometimes competition policy. But really, in thinking about some of these developments, are not mandated to embrace the broader sustainable development agenda. So there is a whole bunch of work that needs to happen in that space out there, as well as some of the things that are very granulated and very specific to what can happen on the ground. And I guess, again, I would be remiss if I didn't, if you like, counterpart some of those extraordinary opportunities with some of the risks that digitalization brings. And I'm not going to run through these individually, but suffice to say the task force has tried to look at both the opportunity side and at the risk side, and really to think about policy and governance as it needs to balance how to try and get at those opportunities and mitigate some of those risks. And so really finalizing the point and then passing back to you, Liz, I guess digitalization in itself may be good or may be bad. It may enable us to reduce illicit financial flows, or it may give opportunities to increase illicit financial flows. It may provide ways to provide more lending to small and medium-sized enterprises. But if those algorithms are biased against women, against particular minority groups, it may create new distortions in the market. It may drive innovation, but it also may drive market concentration, which ultimately is not in our interest. And the challenge is how we grab at those opportunities, push ambitiously in order to catalyze their realization, and at the same time manage the downside of the risks that come with digitalization as well. And with that, Lynn, I will pass back to you.
Thanks you so much, Simon. I have a lot of questions, and also I can see questions in the Q&A box. I would invite everyone to drop their questions to Simon, and I'll make sure to ask and to continue the conversation around them. So Simon, thank you so much for this comprehensive presentation. I want to start with somehow like an existential kind of question. You're saying that you like this initiative or global initiatives should be putting citizens in the center of this the financial evolution or the financial world in general, right? I'm putting it very simply. But also, we know very well that it is, at the end of the day, a matter controlled by companies who, as you have just mentioned, have the power and have the data, and they're already established, and monopolies, etc., and also governments. So how should we think of that, and where does it actually start? Does it start, because I know that the task force seeks to talk to different stakeholders, namely governments, companies, civil societies, etc. But where does it start? Like that's before getting into the technical, financial aspect of the discussion. But that's a question I had in mind.
So so Kristalina Georgieva, who is the managing director of the International Monetary Fund, perhaps given her role, made the provocative statement, it is high time that the financial system returns to its true purpose, which is to serve people. And although that may be an oversimplification, I think it is reasonable to assert that over the last 20, 30 years, major parts of the financial system have become far more self-serving and far less responsive to what we as individual citizens who own the money that they use and intermediate actually need. So the first point is just to, if you like, restate the point, that if we want digitalization to make a difference, it needs to empower people as savers, as lenders, as investors, as consumers, as taxpayers and insurers. In other words, every day we make hundreds of financial decisions, but do we really feel knowledgeable, informed, empowered in order to make those decisions? Now, digitalization can make a very significant difference. Public finance, let me start with that. A radical transparency of public finance driven and enabled by digitalization allows taxpayers to see how every dollar.
I'm going to interrupt you. Sorry, Simon, because we have a question on that. Bouzir Youssef from Algeria is asking, what's the role of government in digital finance post-pandemic? And I think you're answering this now. So you're talking about public spending, public finance in general. And the key to you is to make it digital. What does it mean? Does it mean making the data digital? Can you explain a bit?
Yeah. So let me start with public finance and then go back to private finance. So there are countries where if a minister of government buys a cup of coffee, and charges it to the taxpayer, that cup of coffee spent will appear on a website 3 days later. What was bought, how much did it cost, where was it drunk, and why is it that the minister thinks that this is something that should be charged to the taxpayer? We can move to a radical transparency that allows taxpayers to see to that last cup of coffee exactly how our money is being spent. And digitalization is not the only part of that story, but digitalization is really the enabler that allows that to happen. Allows that to happen at scale. Actually, today there are many initiatives internationally trying to increase not only the efficiency gains through digitalization, but also the transparency and accountability gains of public finance. And to be really frank, it is mainly governments that are resisting that change. It is not a technological problem. It is an institutional problem where governments are not accustomed to that level of transparency and accountability down to the transaction level. So that would be a sort of a piece on public finance. On private finance.
I'm so sorry, I'm going to interrupt you before going to the private finance. Firas Bataine is asking something that is relevant to this part. He's asking, do you think third world countries and third world economies, basically shattered economies, would digital transformation actually work in those countries? And also another question along those lines was, what about countries who don't have the infrastructure for that?
So the country with the deepest penetration of digital payments is Kenya, globally. Far more than Switzerland, Singapore, you name it. So actually, firstly, we have often found that digital innovation is happening most rapidly in countries that don't have mature incumbent financial systems. And so at the Ant Group in China, for example, was able to grow so quickly because China doesn't have a sort of US style financial system with the JP Morgans and Goldman Sachs and everybody else. And so there was far more space to innovate. So the first part of the answer is that developing countries can leapfrog and innovate in this space in the same way that they've done with mobile phones. The second part of the answer to the gentleman's point, is that it's quite right. There are some LDCs, less developed countries, that have a lack of infrastructure or have a lack of infrastructure that goes beyond 2 or 3G. And of course, in addition to that, there are costs of access issues which restrict the ability of people to use that infrastructure even if it's there. And in addition to that, there are literacy challenges, where you have, just yesterday I was on a call with a team of people in India where the person was explaining to me very fully how some of the innovations, that we were looking at were simply not possible because actually women couldn't even really figure out what their security code was into their phone. Because they had not been educated really to understand either the numerical space or the importance of privacy. So there are clearly multiple layers of challenges, and we shouldn't be hubristic or naive, or if you like, Pollyannish in thinking that all of these opportunities can advance really quickly. But, you know, I want to complete this piece by saying, I also think, you know, that the view that one can't leapfrog is wrong. You know, it is Kenya that has launched the world's first bond purchased purely through mobile payment, but through mobile devices by Kenyan citizens. It was not Switzerland or China or the US or Singapore. And we see similarly many of the innovations that actually need to be adopted more broadly happening often in economically unattractive contexts. Could I give one more example, Lynn, just to make the point?
Yeah.
So Zimbabwe, which by any measure is a country whose economy and institutions are having a troubled time, has one dominant payment provider, a payment platform, which is EcoCash, yeah, which covers, I think, 70 or 80 or 85% of all SME digital payments. And they have launched a stock exchange in the context of Zimbabwe, where all due diligence and credit ratings are driven by algorithmic, so, you know, mathematical, artificial intelligence, big data switches from payments data of SMEs, of small and medium-sized enterprises. Yeah, this has never been done. It's been done in the lending space, but we now have a stock exchange where companies are raising debt and equity through the use of digital payments data. Why in Zimbabwe? Well, it's happened in Zimbabwe because they can't figure out how to create high trust institutions that would deliver effective credit ratings that investors would believe in. And so they have innovated in a way that in 10 years' time, the New York Stock Exchange and the Shanghai Stock Exchange will emulate, forgetting perhaps that it started in the most unlikely place.
So that also answers the question of Isa Al-Falasi, who asked basically, what if governments are not able to afford the technology, education, security, and the technical support? So you're opening our eyes on something that's very important, how basically retail investors can actually participate and have a huge role, be it in governments that and help raise money to support those initiatives, or raise money in general through those stock markets, or the example of Zimbabwe you just mentioned. So what about so the regulation part is a huge question, right? On many layers. First layer is well, how should governments put rules for fintech companies and for innovators in the digital finance? And two, how also should it tame? So where should it give opportunities, and how should it tame? Competition, monopolies. It's also very tricky, right? Especially we already have international giants who have all the markets. So what should be done here?
So yeah, so obviously you're right, Lynn, and whoever raised it. This is a tricky area that has no silver bullet. There's no simple, you know, this is the one thing you should do and then everything will be all right. Let's compare Kenya and South Africa. So South Africa has the most sophisticated financial system outside of the OECD by any measure, for rather bad reasons to do with the apartheid period, but nevertheless. And so comparing South Africa and Kenya is quite interesting. Kenya, under the leadership of Governor Ndugu, who was the governor of the Central Bank of Kenya, was willing to take a degree of risk in opening financial markets to non-banking institutions providing financial services that drove forward some of the digital innovations that are now so successfully playing out in a Kenyan context. Now we switch to South Africa, and I don't want to exaggerate the point, but the Reserve Bank of South Africa, so the equivalent central bank, took a much more conservative view, was only willing really to allow digital innovation in financial services to be done by existing licensed financial institutions. Yeah, and the result is that the digitalization of finance as it relates to the broader population of South Africa is far less developed.
Mm-hmm.
Yeah, now, the story there is not, let it all go free and crazy, because you can result in all sorts of other problems. It's
Mm-hmm.
not an extreme of conservatism versus a sort of libertarian approach to market development. But we need central banks not only to be informed, not only to be cautious, but also to be innovative. Yeah,
Mm-hmm.
and the example of the Kenyan central bank compared to many others across the developed and developing world is a sort of useful illustration. And then I would
I hope
add,
they hear you, especially in the region, because you're hearing a lot, of complaints from companies who have, good solutions and innovative solutions, but are still, struggling with the regulators. To switch to another very important topic as well, Ghada Darham is underlining something, the elephant in the room. Privacy and freedom. So what does it mean? Like digital finance, yes, to make the world a better place, yes, to attend to poverty and make it easier to transfer money and make lives easier, yes. But also, does it mean, it may also mean, less individual freedom, more control by whoever owns the data, right?
so I think that's absolutely correct. Again, no silver bullet, but let me make a couple of observations. It is now perfectly possible to have a portable ID that you can carry across borders, so not just a national identity. And it is perfectly possible to construct, both technologically and legally, full ownership of personal data. Yeah, so there is no longer a sort of design problem in play here. Yeah, what do we actually find? Well, we find that digital ID in almost all cases is nationally constrained. Yeah, and so there's very little portability of digital ID, except for the elite, like me and you, Lynn, and perhaps some of the people on the call, where we can swan around the world because we've figured out how to overcome national constraints. And on the data side, sort of the best we have, if you like, is some level of authorization that we see in Europe of the right to use data. But actually that authorization, the GDPR, is an important step forward in securing the rights of individuals over their own data. But in practice means that 40 times a day I go, okay, every time a website says, can we use your data for unknown purposes? Read the following 500
And
pages.
also that only applies to certain countries, right?
And absolutely. So on the one hand, the sort of, whether we call it the North Star or the Southern Cross, the sort of the normative good is portable ID, is owned data that is authorized for use and over time in some areas may be monetized. And thirdly, and this is relevant particularly in the financial market space, data that is available to innovative startups. So part of the danger that we have is that as you get high levels of market concentration of even nice mobile payment platforms and others, is that it becomes more and more difficult for other innovations within the financial sector to really move forward, because either they can't access the data or the costs of access and the complexity of use is beyond what they're capable of doing. So they give up before they start. And so clearly, this is not a data privacy issue per se, but is to do with, if you like, the layer of market data where the regulator, not the policymaker, but the regulator has the ability to ensure a broad-based accessibility that is affordable to allow continued fintech innovation to take place and monopolies that become rent takers to be challenged.
Well, that's interesting, and that's like it would be the ongoing debate between all stakeholders, and we'll always hear individuals raise this question. There's also, speaking of small initiatives and small businesses now, small ideas, entrepreneurship, etc. We have a question from Nizar Wanous, who's asking, because you had also like a section mentioning the SME sphere and basically financing the SME through the use of digital channels. First of all, what does it mean? Can you explain it? Can you go through it with us? And second, he's asking what verticals are among the most pressing at the moment to innovate and deploy when it comes to entrepreneurship or the SME space.
What vertical did you say?
Yes.
And what does he mean by vertical?
I think that he means sectors. I mean, if Nizar, you mean something else other than sectors, then please clarify. But from what I got is like sectors. So are we talking payments? Are we talking like what sectors are we talking about?
Right. Fantastic. So let me address the SME and maybe they'll clarify as I talk. So on the SME side,
yes,
the sectors, okay, are parts of the financial sector. Got it. So on the SME side, the challenge that traditional banks talk about, which is maybe fair, is that the cost of due diligence is high, the amount that's being lent is small, and the delinquency rates are high because recovery is expensive relative to the size of the loan. And so this story that I just told you in one sentence, has been used across the world by the banking community to explain why the SME community is starved of trillions of dollars of cash every year. And I think it's partly true and maybe partly a little less true. So how does digitalization help to solve that? Well, if you have a payments platform that has a lot of data about SMEs, so an Alibaba, an Amazon, some kind of some sort of e-commerce platform where you are also collecting a lot of financial data, then effectively you're able to undertake a due diligence of an SME applying for a loan much more quickly because you can analyze their transactional history more effectively.
Credit bureau, right? For those
credit bureau. So you can do it very quickly and you can assess likely solvency risks and make offers without collateral. So to illustrate the point, let me go to China again, but it's true also in other countries. So the Ant Group, back to Ant, is China's second largest SME lender. And they have something called 3-2-1. It takes 3 minutes to apply. It takes 1 minute for Ant to make a decision. And it takes effectively 0 seconds to disperse the money with no collateral. So the implication is you're removing effectively the cost of due diligence. You're reducing the risk of bad debt because you are involved in this SME in multiple ways, and your assessment of creditworthiness and your decision is not based on any collateral being offered at all. Now that isn't only true in China, it's also, for example, let's go back to Zimbabwe.
And also here in the region, Saudi and the UAE are working
on it. But you also find that there are many countries which have very sophisticated digital platforms, but don't have algorithmic lending to SMEs. bKash in Bangladesh, highly sophisticated, but actually haven't really moved into that loan giving business. So huge opportunity there with risks, with issues like all of the other points that I've made to really break through this boundary or barrier of financing SMEs.
So you think payment is the number one, should be attended to at first or as a priority, to go back to Nizar's question?
So the traditional argument, traditional within the digital community, the traditional argument is it all starts with data. That if you don't have data, there's nothing else you can do. The technology is dysfunctional. So obviously you need the hard infrastructure, 3G and above, and you need cost of access, that enables it to be widely used. So that's level one. Yeah. Then you need, a data market that ensures that data can be used for the sorts of analytics that I've been describing in multiple ways over the last 35 minutes.
Yeah.
Then, obviously, the way that data comes is because you have a digital data payment platform. So exactly to your point, Lynn, without that, most of the other stuff that I've talked about can't happen. Not all, though. If you think about sustainable development screening in capital markets, that doesn't require payments platforms. That's, it's a different type of data set. If you think about $1 trillion worth of green bonds, use of proceeds, that doesn't require data platforms, payment platforms. If you think about global carbon markets, which requires digitalization, that doesn't require that either. So it's not only that. And then I would add, for me, and this is more personal, the most exciting opportunity is the breakthrough between retail into capital markets. Yeah, this ability to lift data to allow capital markets, so long-term financing, to work more effectively.
The Robin Hooding of the world, right?
Yeah, and so, because you used to work at the World Bank, so, everybody in the World Bank and everywhere else in development finance talk sadly about we need to strengthen capital markets in developing countries, but it doesn't happen.
Sure.
Yeah, and so here we begin to have a breakthrough that will put that story to bed, where we can begin to draw from the retail side data and financial flows and begin to create a new capital market architecture that doesn't require that problematic process that hasn't worked in most countries.
Yeah.
I think that's super exciting.
Yeah, it is. It is definitely super exciting. Another question that popped up here in the chat room and also in the world, especially with digital currencies and the stories we've heard, the dark web, like it came with a lot of bad media, not bad media, not the media was bad, but the news were bad, not the media itself.
Oh, I've lost you. Is that me or is that you? I'm not sure if that's you, Lynn, or me. Can somebody signal whether they can hear me still? Hello, hello.
Yes, Simon.
You can hear me?
Yes, we can hear you. I think we lost Lynn. Just let's give her like a couple of seconds. She'll be back.
Absolutely. No, I just wasn't sure whether it was me that was kicked out or her.
No. It was Lynn. It was Lynn.
Okay. Well, I'm sure she will return with her full vigor
yes.
and energy. I'm not sure whether, Serena, you can see the Q&A and if there's a particular piece that I could address easily. Let me just open the box and kind of see what's sitting in there. What do you mean by digital? Let me move. Wow, lots of different questions. That's pretty exciting. So I'm looking at Faten's comment. I can see how this would affect startups and large companies, but what about small and medium-sized companies? I hope I've kind of added a little bit in there on SMEs that kind of help understand how this relates to SMEs. Perhaps let me just sort of add a moment on this issue of international governance while we wait for Lynn to come back. Clearly, there is this growth of what I described in my presentation as sort of big fintech. And these are, these may be in the currency space, such as Libra, which Facebook and others are trying to advance, or it may be sort of in other spaces that aren't involving sort of new tokenization models or new particular currencies. And the real question is, what effect will they have on perhaps smaller, weaker economies, developing economies, and how can we begin to address those challenges? So, for example, a currency like Libra, offers on the tin, a significant reduction in the cost of cross-border transactions, and that is of significant value for many, if not most, developing countries. Just think of remittances. in order to make the point, still the average cost of remittances by migrant labor, can be anything between 6 and 8%, which is a huge cost given that a huge price given that the underlying cost, is a fraction of 1%. So the advantage of these cross-border platforms is very considerable. Lynn, I'm just going to finish the point and then I'll come back to you. But at the same time, if Libra, for example, significantly penetrated a small developing economy, so became a significantly traded currency in a domestic market, it's like dollarization. It's like removing the ability of a country to manage its own currency because it's being pushed out by the US dollar equivalent. It neutralizes most of what one can do through monetary policy, so interest rates, inflation, and so on. And it begins to encroach on economic and industrial strategy and policy. Now that's not what Libra's setting out to do. So we shouldn't think of this as a sort of evil empire problem in the first instance, but certainly these very big fintech platforms, if they begin to penetrate domestic economies, will have all manner of effects on how those economies operate in practice. And I have to say, in addition to the risks, there are advantages, and I wouldn't want to just present big fintech as a sort of monster risk, because we need to see the upsides of what they can also
maybe
bring to
we
town.
have been seeing a lot of resistance slash skepticism from central banks because, well, the whole raison d'etre of those digital currencies implies, removing the third party, which in this case is the central bank, right? It's funny, I cut because I was asking you a question from a participant about money laundering and corruption. So he basically, the question was about, and also it goes along or as a continuation of what you were just talking about. So can digital transformation help, or is it actually an additional challenge to corruption and to money laundering?
So, so the technically correct answer to your question is yes. So what does that mean? So it means, depending on which numbers you use, there may be anything up to $1 trillion that are attributed to cross-border illicit financial flows. Actually, nobody really knows what the number is, but it's clearly very large, made up of many different parts, and a problem in that it also drains public resources, and it undermines domestic institutions and so on and so forth. So digitalization allows one to track financial flows more effectively, and to that extent reduces both the potential for grand theft, large-scale movements of money, the potential for micro theft, so sort of corruption of local bureaucrats and officials, if you like, so at a much more micro level, and mitigates that sort of meso space where illicit financial flows might have, be linked to, human trafficking, be linked to wildlife trafficking, all sorts of indirect impacts because of what the money is actually related to. That's the good news. Then the bad news is digitalization also provides lots of new digital pathways to try and move money. Mm-hmm.
Also, it depends who owns the data, right? Like if the government is corrupt, right? So how will it use it? How will it collect it? So
absolutely. So
another silver lining.
So on the one hand, digital helps to track and mitigate, and on the other hand, digital provides new opportunities. And the point is, and I've made the point across a number of domains, that's true in every single area. It allows one to lend more quickly and more cheaply to SMEs. But it can also lead to extreme levels of discrimination and exclusion and biases in the way such lending decisions are made.
We have more econ-focused questions before we run out of time from Amir Hamid asking, what is the effect or impact of the digital transformation on liquidity that is needed in local markets and also in the business world? And also we have Alauddin Ahmed asking, about the relationship between digital transformation and inflation.
Sorry, digital transformation and?
Inflation.
And inflation. Oh God, these are way beyond my pay grade. So on the first point, the general view is that digitalization supports an increase in liquidity across most markets. That's the general answer that's given. Because it moves data faster, more accurately, cheaper, more timely, all of that stuff. You know, if you think of markets basically as just flows of data, clearly this helps kind of push the button. But again, I'd like to make the point, you know, there are ample studies out there that show that high frequency trading is disadvantageous to long-term investors. And that can, not must, but can constitute effectively a private tax on pension funds seeking to invest in long-term sort of equity and debt plays. And so again, you see the danger of digitalization is that it leads to hyperliquidity, and hyperliquidity comes with a whole set of risks that really most folks working in financial markets, sort of the regulators and experts, have no effective framework for thinking about or dealing with. And then the inflation
that's a very interesting point, actually. That's a very interesting silver lining, like an additional silver lining to financial markets.
Yeah, you know, combination of both once again. You know, the UK recently did a study suggesting that high frequency trading was taxing the UK pension industry by about $5 billion a year. You know, so these are significant challenges that require regulatory solutions. I don't think we should blame data for that. And I don't think we should blame technology for that. It's the wrong way of thinking about it. But it challenges regulators, you know, to be highly sophisticated and have considerable capabilities in managing what is an increasingly rapidly changing complex system.
We don't have a lot of time left. Unfortunately, there's a question that was really recurrent. I don't know if you want to answer it because I don't know. I'll just ask it. It's about Bitcoin. So Bitcoin, people want to know what your view is on Bitcoin. If you see, you know, it's being a part of the solution. Is it like a key in digital transformation? We've had it, you know.
So let me answer more generally, if I may, Lynn, you know, which is, I think we are on the edge of a revolution in our mediums of exchange. Yeah. And on the one hand, we have experiences such as the early experience of Bitcoin that can lead to speculation and increases in money laundering, reductions in transparency, and all of the challenges that may come with that. And on the other hand, you know, we may have currencies in the future that are built out of valuations of carbon or green or measures of inequality, you know, that we may begin to create currencies that are rooted in values, not only in value. Yeah. And so I think we're at a very early stage in this game. Obviously, I'm excited by the possibilities and not dismayed, but sort of, you know, there's an inevitable sort of early stage buccaneering that is unlikely to spell out our future.
That's a very wise answer. Before wrapping up, Simon, a couple of participants asked whether they can find your presentation anywhere.
So firstly, if you go on to www.digitalfinancingtaskforce.org, or just type in UN Secretary General's Task Force on Digital Financing.
The Financing Task Force.
You'll find lots of stuff there. But slightly looking to Serena, I'm happy to provide a version of the presentation. If Serena, you'd like to make that available as a PDF to folks who have been participating in the conversation.
Okay, awesome. Thank you so much. Okay, thank you, Serena. So on that note, I would like to thank you so much, Simon, for this very insightful chat. I think, as you just said in the last answer, right, this is just the beginning, and the task force, the work that you've done, and the team, of course, is just really amazing, and so much material and so many questions to explore. So I would really hope we'd be able to discuss and chat this further. Meanwhile, or until then, I would thank you for this, and I will thank everyone who joined us in this live chat.
Thank you, Lynn, and thank you, Simon, for this really interesting session. We hope to see you at the Knowledge Index launch ceremony today at 5:30 p.m. Dubai time.
Thank you very much. Lynn, thank you so much for an excellent moderation. And thanks to all of those who I can't see but are out there. And I'm hoping that the discussion was helpful. Many thanks indeed.
Thanks.
Thank you.